Hi, ladies and gentlemen. I'm Renee Springstead with your April 14th, 2025 market commentary. And we're just going to dive right into kind of what we experienced over the last week because it was a big week last week in the stock market. We saw a lot of volatility in both directions, and I wanted to dive in and explain kind of the hypothesis from the investment committee on some of the reasons for maybe what we saw and what it means going forward, right? So on April 9th at midnight is when all of the tariffs were to go into effect that President Trump had just announced. There had been a lot of countries coming to negotiate different trade deals with him, and he was saying that he was going to stay the course. At a little bit after noon the following day, all of a sudden President Trump announced that there was going to be a 90-day pause, that about 75 countries had come to the table to negotiate, and so there was going to be a 90-day pause on the tariffs, with the exception, of course, of China. And so when we dive into that, let's understand, what could have happened there. Is it just that these 75 countries came to the table, and so he wanted a little bit more time, or was there reaction in the bond market? So normally when the stock market is experiencing a lot of volatility, investors have a tendency to flock to safety, to invest in U.S. Treasuries. So that increased purchase makes the price go up and the yield go down. That is not what we saw at all. As a matter of fact, there was a U.S. Treasury sell-off. It's suspected it was being done by Japan, and that sell-off of the U.S. Treasuries caused the inverse of that. The stock price, the Treasury prices went down and yields went up. President Trump does not want higher interest rates at this point. He took these warnings from the bond market very seriously and implemented the 90-day pause is one of the hypotheses of what went on. And so when we look at it, what do we have now? We have a 90-day pause. We still don't have any answers, so we are still expecting more volatility until this is all kind of washed through. But when we go back and we take a look historically, and I'll include a chart in with this email, it's very normal to see large sell-offs followed by large rebounds. And as a matter of fact, normally when you go ahead and you take a look, 1 year later, if you look at the top 10 sell-offs, it was positive every time but one. At the 3 and 5 year mark, it was positive every time. So that's kind of where Warren Buffett came out with his very famous saying, be greedy when others are fearful. And it just continues to emphasize the importance that we take on financial planning. And we encourage you to continue to call us, to continue to work with us on your plans and your market needs, and to also know that your investment committee is diligently following these changes.